All right, here we go. Now in the North Loop market, there's been about 30,000 square feet of construction that's just been completed this past year. That's a minuscule amount. It's very, very small. And that's concerning to me because that shows that there's a lack of confidence in the office market to get more traffic. And that makes sense because the vacancy rate in the North Loop market is 16.9%. And last year it was 20%. So it's bad this year. It was horrible last year. And it doesn't show any signs of it getting that much better. Now, to clarify what vacancy means, that means that 20%, 16% roughly of the office space in this entire market is vacant. Nobody's in it. And I'm arguing it's higher than that because the spaces that I look at, a lot of Class B, Class C stuff, it's not counted in those numbers. So we may be talking about a vacancy rate that's well over 25%. I think that's more accurate. And again, that's a sign that the market is stagnant. Well, what does that mean? From an investor's perspective, unfortunately, I wish it meant that the prices were different if you're buying property. That's not the case in Houston because there's too much money out here. There's too much international money, there's too much local money, so we're not gonna see that. But if you're a tenant looking for space, what it means is there's a lot of space to choose from. High vacancy means lots of choices. High vacancy means lots of negotiating room on spaces if you know what to ask for and you know where to look. And high vacancy means low rental increases. So let's talk about rental increases for the year. Rental increases are about 0.4%. That's also extremely low. It doesn't keep up with inflation. The Galleria was at 0.7%. The North Loop is at 0.4%. That's half, about half, right? So we're talking about a flat, stagnant market with no tenants moving in, some tenants moving out, but it's a small amount. So what that tells us is, over a period of time, we're gonna see this market deteriorate a little bit. You're gonna see more conversions, but I project to see more multifamily because I think that market's just frankly doing better than office space. I think there's gonna be more multifamily. I think there's gonna be more conversions, and there's definitely gonna be a flight to quality. And what that means is you're gonna see a lot of office building owners convert their space, renovate the lobby, fix up the bathrooms, and jack up the rental rate. And hopefully try to cater to the businesses that are popping right now, which is the bigger regional and national companies here in the Houston market. And I'm gonna give you an example. 550 Westcott. We toured this property today. They're gonna spend $3 million approximately on the lobby area. Their rents are about 27 bucks a foot. Once they do all of this, expect them to go up. I think they'll be above 30 bucks a foot pretty soon after they do that. That's part of the plan. Is that common? Yes, it's common for buildings like this in the marketplace. So if you're looking at buildings like 550 Westcott and you're a smaller business, just understand that the rates may be competitive now, but they won't be competitive when you sign that lease 2 or 3 years from now after the lobby's renovated and those capital improvements kick in. And I do mean kick in. I expect to see a lot of smaller businesses call me and call other brokers looking for other options. And the thing is, they're gonna find them because with a market where there's 16 to 20% vacancy, there's lots of options to choose